Welcome back to Trading with CJ. I'm really excited about this one today. You will know, if you've been following my channel from about early 2020 to mid 2020, you'll know I absolutely love the travel sector, okay? I love these stocks and it's one of my favorite things to do. I love to travel and I cannot wait until we are able to go out and travel again. We even started a travel stock playlist where I've done analysis videos on UK airlines, US airlines, cruise lines, you name it. Now, it's been a while since we spoke about the travel stocks. However, with it being about a year now since the market crash, I think it's a great time to, reevaluate our position on these. Is it time to buy these stocks? Should you just hold if you already own them? Or should you be selling if you already own them? So that's what we're going to get into in this one today. And if you appreciate all of this, please go ahead and smash the like and subscribe to my channel. That really is appreciated. So if you see any of my early videos, you'll know that I do own plenty of travel stocks, okay? I do own some. I have sold out of a couple since, but I do own quite a few. You can check my high risk portfolio update and also my analysis videos on them because I mentioned whether I own the stock or not. And I will go through some I own today as well. There's a lot of talk about people starting to move towards some of these recovery plays. The travel sector, for example, which as we know was the worst hit sector out there, okay? Some of those stocks plummeted 80% in a matter of days, which is absolutely crazy. And they're on the road to recovery now, that's for sure. However, there's a long way to go still. That's what we're going to get to in this video. So I want to take you into this article. This is from Jim Cramer. Cramer says that post-COVID travel boom could be the sky's the limit and investors aren't ready for it. He says that it's going to boom here in this country and I don't think people are ready for it. When I speak to the pharmaceutical companies, they think it's going to boom. Transportation companies think it's going to boom. This may be the sky's the limit situation. Personally, like I said, I love this sector. I would love for this to be true. I think it is a matter of time now. It's definitely a great time if you're not already in this sector to maybe start nibbling away. We're going to go into some of the potential options in this video. So the reason that this is becoming a lot of hype at the moment is because we've heard a lot of great news about the vaccine rollout. The UK is smashing it at the moment. The US have big plans to get everybody vaccinated. Things are looking very, very promising. Once the vaccinations are in place, guess what? Travel restrictions will be lifted. People can start to travel again. And I really think people are going to want to travel again. I personally, in my mind, I cannot wait to travel again. As soon as it is, safe as possible to do that, definitely I'm going to be going. And I think that's the case for many people. People who maybe haven't travelled for years are going to be like, you know what, let me just take a break right now and travel. People are going to be travelling, in my opinion. It may take time. It's going to be a slow recovery. I don't think we're going to see, snap like that straight up like that. However, I do think that in the end, this is going to actually work out really great for these companies. I want to show you this article here from Yahoo Finance. Which travel stocks to consider post-pandemic based on web search trends. So this is just a few stats going around in the last month or two, and it's quite interesting to see, okay? This is from the TSA, the Transportation Security Administrations, and from February 25th onwards, they say that it costs 1 million, which has only previously been seen on weekends or holiday periods since the pandemic began. So that is insane, okay? Right now, more people are traveling right now, or at least along those lines of wanting to travel than before any time during this pandemic. Delta, one of the big US airlines, has seen a significant step up in travel demand related to both near-term and summer bookings. And this is similar to Southwest as well, as a result of our weekly charts indicating domestic demand improving even outside of peak holiday/weekend travel. Things are definitely on the up. Southwest Airlines remains America's sweetheart and has outperformed peers because of its focus on domestic, which the airlines call visiting friends and relatives. And we have spoke about Southwest before. It is one of my best plays in terms of US airlines at the crash level, but now maybe there's some other potential options going forward. Also the cruising, okay, it goes on to talk about cruising in here. We are still seeing continued traffic to information pages, cancellation pages, and really pages where consumers are not necessarily booking on site. Carnival recently pushed the suspension of operations through May the 31st, with cruise lines doing the same. Kapur predicts continued volatility in the cruise sector for the next few months with a possible pickup by the summer. Now, I do agree with that. Cruise lines are going to be the last sector here to open, so it's probably the most riskiest play out of all of them because you're basically trapped on a boat, okay? And there's going to be very limited social distancing going on a cruise ship, so there's that to consider. We're going to talk now about some of the different sectors going into and whether I think they are good buys right now, whether you should be holding off or just selling your shares. Personally, for me, I'm going to come straight out and say I don't think selling any of these sectors now is an ideal situation. I think we are just really getting started. I do think that, in some situations it is getting priced in. People are expecting a recovery, so these prices really are shooting up. And we're going to cover that in just a moment. So let's first talk about the cruise lines, okay? I'm just going to give you one example, but you've also got Norwegian Cruise Lines, RCL, but we're going to talk about CCL right here. CCL was one of the worst hit companies, and everybody was talking about CCL because it dropped down to around about 80%, which was an insane drop. It went down to around about $7 and something at those crash levels, okay, and it was trading at pre-crash, early February, was trading at $42. So that has had a massive sell-off. But if we look at where it was from the 3rd of April onwards, we are already up over 200%. Insane growth from that. So we've recovered 200% already, and from the crash level, we're still down around about 40%. So there's a way to go yet. However, if we look at the recovery it's had, it is absolutely insane. Now, if you bear that in mind with the current situation, has anything really changed specifically about these cruise ships? No, they've got more debt. They've actually got worse. Their balance sheets have got a lot worse. They're going to have to pay all of this money back at some point, that's for sure. However, we do have the vaccination news. So obviously they are going to recover somewhat. But to recover 200 and something percent, I think it's pretty insane. And you could argue maybe in some of these cases now, people are buying into these because they're expecting recovery. And I do think we are going to get that. I personally think that these are great short-term holds, and in some situations here, long-term. But most of these, Carnival, like I said, they're going to have to pay that debt back. It's not a company I'll probably be wanting to hold for 5 years or so. I will definitely be holding it in the short term. I do hold Carnival. I managed to get in at those crash levels. So yeah, that's my thoughts on the cruise lines as a whole. They're going to take the longest time to recover, but they also do have the most upside potential. We're looking for some short-term games, maybe within the next year or so. I do think that these are great alternatives because the upside is a lot better than some of the other options out there. Which brings us on to our airlines, okay? Airlines, these are a little bit all over the place. As we mentioned, Southwest, that's a domestic airline. And you've also got some low-cost airlines which are flying internally, okay, between different cities rather than different countries. If we take it to Jet2, for example, this is a UK airline. Jet2, if we look at where they're currently at compared to the crash, they crashed down a whopping 71%. Absolute crazy. Now, this is one of the best financials in terms of UK airlines out there anyway. And yeah, if we look at where it is now, it's only down 28% from the pre-crash levels. So it has recovered a hell of a lot. And that is because this is a low-cost airline and people can fly between different airports in the UK. And that's what they're used for, these, because these are smaller, shorter flights. So companies like this, I do think they are good because they have one of the best financials. However, they have recovered a lot. So your chances of getting an amazing gain on this is less than what it would be going for a much riskier strategy. But this is a safer option and kind of in a middle ground option, in my opinion. It's safer because it's recovered a lot, it's shorter flights, you can still fly domestically, but it's riskier because it's an airline at the end of the day and it still had to take on a lot of debt. So this is like a middle ground option. We've also got other ones like Wizz Airlines. Wizz Airlines is very similar to Jet2, but this is actually trading higher, way higher than it was post-pandemic, which is just insane to see. So they've got very good financials as well, so you have to consider that. But then we've got, extremely hard hit airlines like American Airlines, which don't have the best financials out there. But once again, we have seen quite a nice recovery from American Airlines. If we look at where they are from their crash, they're still down about 30%. But if we take it where they was, which was at one point around about 80% or something, it's absolutely insane. So once again, I do think these are priced in with the airlines, but they are still risky in somewhat. But the growth potential, in my opinion, is huge. If I had to choose, I do own both airlines and cruises, but if I had to choose between them, I think the cruises have a much more upside recovery, that is for sure. But if you are going to get an airline, definitely weigh up what you're looking for here. Are you looking for riskier, potentially higher rewards, or safer and with a stronger balance sheet, maybe less upside? That's what you have to consider with these ones. Now, there are a lot of different sectors within the travel. We've got the airlines, cruises. One more here is the hotels. I'm not going to cover this too much because I don't want this video to be ridiculously long. But the hotels are actually surprising me because they are all pretty much, from what I can see, most of them are trading higher than where they was pre-crash, which is once again pretty insane. Maybe people looking to take domestic breaks inside of their own country, etc. I know in the UK that is still not possible to do. So there is still an upside with that. Imagine when they reopen, they're going to be trading even better. But if you look at what they're actually doing right now, they're probably making less sales than what they was a year ago, but their trading share price wise is a lot higher. So this could be another case of, people are buying these because of the situation. So it's definitely worth considering. I don't think they have the most upside, although obviously the sales will grow because people are going to want to be booking hotels. But you've got ones like Hilton, for example, Intercontinental, Marriott. All of those are smashing it. They're pretty much trading at higher than where they was pre-crash. But if we take Marriott, for example, they're actually making profit, which is unlike a lot of these. But Marriott are trading at a PE ratio at the moment of 279. That is higher than some of the big giant tech stocks out there. So do you really think Marriott should be trading at a price to earnings ratio of 279? I think it's quite overvalued. So that's where I do think you want to look more towards these value buyers in terms of the airlines and cruises. You've also got one that's kind of a middle ground. One of my favorite companies in this sector. It's not got the best financials by no means, okay? We're talking about TUI. TUI is a mixture of everything. It's hotels, cruises, holidays, flights, you name it. It's a bit of everything, okay? Which is why it's kind of seeing middle ground. It's got a long way to go until recovery. The finances are not good. This for me is a short-term hold, looking to hold this one for maybe a year and a half, around that. And I think I'm going to make crazy gains. We're already sitting on nice gains personally. And I can imagine adding at least another 50% on that easily in the short term. So companies like that, which have a little bit of everything, are definitely exciting. There's two more sectors that I want to briefly give my thoughts on. One here is Expedia. Expedia is an online travel company. Once again, absolutely smashing it, trading ridiculously higher than where it was pre-crash. Then you've got On the Beach, which is a holiday company in the UK. Once again, this one isn't trading higher just yet, but it has pretty much recovered. If we look at where it was pre-crash, we're actually pretty much level, okay? So the recovery there, and these have been absolutely insane, and you can only imagine they are going to go higher because online bookings are going to start picking up. And we went through those articles at the start. People are starting to, you know, book holidays online. So when this picks up, sales are going to pick up. Will we see a drop off in maybe 6 months' time? Potentially. So these online ones, I actually sold out of on the beach. I actually took some gains on the beach. But yeah, these online ones are not ones that at its current prices interest me too much. But now you've got the safest play of all, my last one up here. This isn't necessarily the travel sector. However, they do have a big exposure to the travel sector. You want to look at things like Disney as well. Disney, for example, is obviously absolutely smashing it. They've got their Disney Plus and everything else. But the movie theaters haven't opened yet. And their cruises, they have holidays, they have theme parks. They've got it all, okay? And so you can only imagine that this company is a beast at the best of times. And when all these things open up and start making big money, I think this is a great company, okay? And this is one of my largest positions for sure. It has run a lot. I think you would have been a lot better getting it at last year's crash price. But of course, if we do see this drop off in the coming weeks, I think it's a great time to get in if you're looking for a bit more of a safer, but still have big exposure to the recovery side of things, okay? You also have companies like Wynn Resorts, which is casinos and stuff. Once again, you know, casinos, tourists aren't going over, betting their money in casinos right now, etc. So that's something else to consider. So that's my little bit of insights into each of these sectors. Personally, I think the airlines and the cruises are still the best in terms of recovery plays because they haven't actually smashed past those levels where there was pre-COVID just yet. And that is relevant to the sales. The sales are not going to be nowhere near what they was pre-crash levels. So that's what I want to look at. I kind of like looking at the price to earnings ratio or the price to sales, etc., and seeing where they're currently at in this particular sector because it's worth considering. In my opinion, why go for something that is trading at a 280p ratio when you can get an airline that's trading at a 5p ratio, especially if you're looking more short term anyway. But that's just my thoughts on this sector. I will do a general, and maybe do a tier list potentially on my travel stocks at some point. But yeah, I'm happy to talk about travel stocks in this one because it's been a while. I'm still holding on to mine. I haven't bought anything else because I do think the prices are running up quite a lot at the moment. I would actually like to see a pullback on this sector, to be honest. But I'm not sure that will come because obviously the good news is coming. And if anything, I think it will continue to go up in the short term. But that's just my opinion anyway. Thanks for watching. Let me know your opinion as well. And if you want to join our Discord, it is completely free. Please go ahead and smash the like and subscribe to my channel. And until next time,